We have a wonderful lineup for you today, and this morning we want to start with J.D. Davids, Executive Director of the Ohio Venture Pipeline and Managing Partner of Smartmoney Ventures. He's coming to the stage right now to talk to you about the Venture Pipeline Report. So please, let's welcome J.D. to the stage.
Thank you, Maureen. Thank you. Thank you, Maureen. I appreciate that warm welcome, and welcome to everybody. You know, this is the third time I've attended VC Fest, and this is definitely the biggest and the best one of all. It just keeps getting better every year, and so I'm excited to be here. I'd like to put a special shout out to Hardik Desai of Jumpstart for making today possible, and I'd also like to get a special shout out to Lee Mosbacher of Cyranus, who is the premier title sponsor of this event as well. So real quick, how many people in the room right now are currently from Ohio? You live in Ohio right now. Awesome, that's excellent. I'm gonna need your help in just a second. For those of you that are not living in Ohio right now, please raise your hand. You know, it's been a real pleasure to meet a lot of people that I know and strengthen existing relationships, but more importantly, meeting all the people from out of state. So let's give them all a warm Buckeye welcome by a rousing OH! OH! Excellent, thank you very much. You know, as Maureen mentioned in my bio, I am a boomeranger, which means that I started out, are we gonna put the slides up here as well? Real quick. I grew up here in Ohio, and I'm a boomeranger, meaning that just like the flight path of this nightlight boomerang, we always end up where we started. So I grew up here in the Midwest. I got a great education at a Big Ten school, and I went to California because that's where all the money and all the jobs were. And I was privileged to be a software company founder, as well as serving on the management team of 8 different venture capital-backed companies where I raised over $100 million across all those companies. And I was fortunate enough to close over $1 billion in corporate finance transactions. And I returned to Ohio just a few years ago for family reasons, and I'm glad to call Ohio home once again. So there's a lot of boomerangers in the room as well, and I think we need more and more of us. So my entire business career was in California, and it gives me a unique perspective on what's happening here in the region. And just a couple of observations. You know, the greatest asset that we have in Ohio is our people. Because people are just genuinely nice here. I noticed it right away when I came back. And if there's one thing I learned about business, doing business all around the world, is that people do business with people that they like. And the second thing I observed is that there's some really great venture deals here, but not that many people know about them. For example, last year, 295 startups across the state of Ohio raised over $1.3 billion in venture funding. And when I tell people that, they say, wow, I had no idea. And that's exactly why we do the Ohio Venture Pipeline. We've been producing the Ohio Venture Pipeline for over 3.5 years, and today is our 6th semi-annual presentation, and I'm glad to be doing it here at VC Fest. Our mission is to shine a spotlight on all of the great entrepreneurs that have already successfully raised venture capital and are building their companies right here in Ohio. And here's some of the photos of our all-stars at the State House, and you may recognize some of these faces. And this is the full class of the Ohio Venture Pipeline All-Stars, the class of 2024. I'm also excited to let you know that we're going to announce the nominees for this year's class of 2025. But first, I want to tell you about the data lake that we've put together. Every quarter since January of 2022, we've been scrubbing and tagging all of the venture-style deals completed by Ohio-based companies. In 2022, we had 214 deals that raised $2.4 billion. In 23, we had 269 deals that raised $1.4 billion. And last year, we had 295 deals that raised $1.3 billion. And today's report, covering the first 6 months of this year, includes 146 venture deals that raised approximately $790 million. So when you add all that up, we've got 920 deals in our data lake that have raised $5.9 billion for Ohio-based startup companies. We're collecting over 40 data points on all of these companies, and that puts us in a unique position to do some fascinating data analytics on Ohio's deal flow. And I'll be honest, it's a lot of work to do this, but we couldn't do it without the support of our sponsors. Book & Street supports the Ohio Venture Pipeline and many of the entrepreneurs in this room with accounting and financial services. And Spoke Design also supports the Ohio Venture Pipeline and many entrepreneurs in the region. All the work that goes into the Ohio Venture Pipeline has a very important purpose. Raising awareness about these stories is important because entrepreneurs with funding create high-paying jobs. Now, I've always known, after living in California for 28 years, I've always known that venture capital creates high-paying jobs fast. But until now, I didn't have a statistic to prove it. But now, thanks to the National Venture Capital Association, we actually have that statistic. Because the NVCA, in partnership with two other groups, did a study of 67,000 venture-backed companies over a 30-year period, and they determined that venture capital-backed companies grow jobs 8 times faster than any other source of net new private sector jobs. And even in economic downturns, it grows 4 times faster. We have some great examples of that here in Ohio already. Cover My Meds was the original unicorn in Ohio, and now they currently have 1,600 employees. Upstart, this is an example of what I like to call backdoor venture capital, meaning that the company is headquartered in California, but they're actually employing a lot of people here in Ohio. Upstart, they're based in San Francisco. They have 1,600 employees, and at least 500 of them are here in Ohio. Anduril and Intel are also examples of backdoor venture capital. Probably most people have heard that Anduril is only 8 years old, and they already have 6,000 employees, and they're committed to creating 4,000 great high-paying jobs in Ohio. And Intel, well, if you know anything about Silicon Valley, Intel was one of the very first venture capital-backed companies, and so they're creating jobs here in Ohio. And so with that in mind, let's take a look at the state of venture capital across the nation today. Now, quick warning, we're going to go through a lot of information in a short period of time, but I promise at the end, I'll be able to give everybody an opportunity to get copies of all the slides. So venture capital is really all about the flow of money. And I like to say that there's a supply chain for capital, and there's a lot of different variables that affect how fast and efficiently that capital flows. This chart shows the quarterly fund flows for the last 10 quarters. And you can see that in Q1 of this year, we had a nice uptick in over $80 billion. But Q2, they fell off a little bit past below the fourth quarter of this year. Most analysts are cautiously optimistic about increased deal flow for the rest of this year. But that depends on interest rates and several other factors that we're going to talk about in a minute as well. Now, when we look at deal count, it's an obvious steady decline in the number of venture deals that are getting funded each quarter. That's primarily because of the lack of exits over the past few years. And VCs are doing fewer deals with their later stage portfolio companies to keep them alive until the exit activity picks up. But the good news is the explosion of investment in artificial intelligence. This chart shows the percentage of total venture capital investments going into AI-dominant companies versus everything else. And the trend here is obviously up and to the right. 58% of the venture capital in the first half of this year and 36% of the deals went into AI-dominant companies. So if you're an entrepreneur trying to raise money in this environment and you're not AI-dominant, I encourage you to consider becoming AI-dominant. And if you read the news headlines, you also know that just a few companies are raising enormous amounts of capital. In fact, in March, OpenAI closed the largest venture round in history at $40 billion. And their valuation is $300 billion. And to put that in context, GE Aerospace's valuation is $298 billion. So OpenAI in just 8 years has eclipsed the market cap of GE Aerospace. Even the largest public company here in Ohio, Procter & Gamble, is not much further ahead with $698 billion. So investors are putting massive amounts of money to work in AI, and primarily because it's not just the next big wave. It's bigger than all of the waves of technology that came before. There have been 4 major waves of tech disruption in the last 30 years, and this chart reflects what percentage of the VC deals went into each phase. It starts on the left with the internet in 1995, which is the year that I moved to San Francisco. Then the next came the mobile internet, followed by cloud computing and Gen AI. And if you look at that little pink triangle in the upper right-hand corner, it shows that cloud computing and Gen AI are consuming nearly all of the venture capital that's being deployed right now. So while AI continues to dominate the headlines, it doesn't operate in a vacuum. The pace and direction of capital flow has to do with a lot of other macroeconomic factors as well. Inflation interest rates definitely have an impact, and if we're lucky in today's Fed meeting, they'll probably lower interest rates as everybody expects. We also take a look at GDP growth as well as corporate earnings, and recent disruption and uncertainty around tariffs and taxes are impacting both the spending and investment decisions across the board until the dust settles. But exit activity and IPO and acquisitions, this is one of the best leading indicators of how venture capital is likely to flow in the near future. So let's take a quick look at the exit activity and how we're shaping up so far this year. This is a quarterly chart of the exits by VC-backed companies over the last 4.5 years. And you can see that the last few quarters are starting to show a tick back upwards. And you may have seen some headlines about IPOs this year as well. And this 5-year chart shows a similar trend in IPOs. But the one thing that's important to mention is how many deals there are where the acquirer is actually another venture capital-backed company. This chart shows on the left that 10 years ago, 80 to 90% of the acquisitions of VC-backed companies were done primarily by industry gorillas looking to capture new products and rapid revenue growth. Now, obviously, that trend is changing because now we're looking at 35% of the deal activity being transacted by other VC-backed companies. And the other thing it's important to realize is that acquisitions are happening much sooner in the cycle than they used to. If you look at this chart, the brown area represents acquisitions of seed stage companies over the last 10 years. That aqua color, that's Series A companies that got acquired. So when you put those two together, 60 to 70% of the exit activity is happening at the seed and the Series A stage. And we're even starting to see the little orange in the bottom where you're getting pre-seed companies get acquired. The other trend you should be aware of is what I like to call a partial exit. It's a secondary market transaction. So secondary transactions are ones where the VCs that didn't get to invest at the beginning, they want into the deal. And so they buy shares from earlier stage investors in the deal, as well as employee shares. In fact, this chart shows that the amount of VC dry powder that's committed to secondary market transactions is at an all-time high of $9.8 billion. We also see a continuing trend of the time between investment rounds is getting longer. This chart shows the number of months between financing rounds. You're starting on the left, you got seed and Series A rounds. The median number of months between a seed and a Series A is 28 months. That's significantly longer than it used to be. And as you can see, the trends in later stages are even further stretched. Now, to be fair, this analysis excludes bridge rounds, but the takeaway from this is that entrepreneurs need to find ways to manage cash and extend their runway in line with the current fundraising environment. So with that all in mind, I'd like to share some advice for the entrepreneurs in the room. The first thing to realize is that the rules of the game are different in this environment. When things are going well, the entire VC game is all about top-line revenue growth at all costs, because revenue is one of the key drivers of the exit value of a company. And in today's market conditions, the game is more about cash is king, and VCs are asking, how long will it take you to get profitable? So for that reason, the most important things for entrepreneurs to watch is your cash burn rate very carefully in this environment. David Sachs was the COO at PayPal and the founder of Yammer, and with a unicorn exit, he's now a VC at Kraft Ventures. David talks about the cash burn multiple. It's a measure of capital efficiency. To calculate your number, you take the net cash burn of your company and you divide it by the net new ARR, your annual recurring revenue. And if your number is above 2, he recommends making expense adjustments. And if you can keep it below 1, you're being very capital efficient. Now, obviously, this is hard to do, but these are wise words from an experienced hand at the business. The second piece of advice for entrepreneurs comes from one of our all-star nominees for the class of 2025, Katie Trouth-Taylor. Katie's been slugging it out on the fundraising circuit, and she successfully closed a seed round for her startup earlier this year. And I asked her what advice she would have for entrepreneurs today, and her encouragement for entrepreneurs is don't be afraid to own your status as a Midwest startup. We're capital efficient, we have a ton of grit and resilience, and we won't give up. And I definitely agree with her on that for sure. So with that as a backdrop, let's take a look at how capital is flowing in Ohio specifically. First, I want to tell you how we compiled it. We collect data from various sources, and we spend a lot of time actually correcting errors and inconsistencies. And then we create custom tags for funding stage, geography, and industry. And then we publish the results for all the attendees because we're a grassroots collaborative group, and we like to share all this information in a pay-it-forward kind of way. We often call it deal flow as a public service. However, we don't claim to be perfect. If you have any additions or corrections, please send an email to us at data@smartmoneyventures.com, and we'll be sure to update our records. So let's dive into the deals for the first 6 months of this year. First, I want to zoom out and take a look at all of the capital flowing in Ohio. $27 billion is the amount of money that was invested in Ohio-based companies just in the first 6 months of this year. And let's take a look at how all that breaks down. In blue, you can see that the large public companies raised the bulk of the dollars with $17 billion, followed by brown, which is debt deals, for $9 billion, and venture capital is that 3% sliver up at the top with $788 million, followed by grants at less than 1%. Now, obviously, venture capital is currently a very small portion of the total capital flowing into the state. Now, that chart's based on dollars. Let's take a look at what it looks like from a deal count perspective. And this shows a very different picture. Over half of the deals are actually venture capital, 146 to be exact. Now, that's the part that I personally care about the most, because that's where I've spent most of my career. So we've got 146 deals in venture in the first 6 months of this year. Let's see how big they were. We had one deal that was really big, over $100 million, and we're going to take a look at that one in a minute. And we had 18 companies that raised at least a $10 million round in the first 6 months. And we had another 49 startup companies that raised at least $1 million, but less than 10. Now let's take a look at how they break down by industry. On the far left in blue, you can see that technology and software companies raised the most, with over $249 million in the first 6 months, followed by life sciences and healthcare at $219 million in brown, and the rest was professional services, food, beverage, and ag tech, and other areas. So that's the dollars. Let's look at the deal counts. On the left in blue, you can see that technology and software closed 48 deals, life sciences with 44, and professional services and other industries down the line. But the most interesting slide is where we look at deals by stage of development. From left to right, we had 25 incubator deals in blue, 18 pre-seed deals, and the seed funding category is clearly the largest with 38 deals. To the right of that, we had 8 Series A, 11 Series B, and on down the line. Now, there's one important trend that I want to point out on this chart. There's 33 deals that do not specify a specific series. They're starting to classify them as only early stage or late stage. And I believe that this is because a lot of them are bridge rounds and they don't really want to specify a series. But it's important to note that we've got 33 of these deals that need to be reclassified. Now, my favorite part about this chart is that we have a healthy crop of young startup companies in the seed stage level. And I want to encourage everyone to rally around these companies, because if they're successful, then we're all going to be successful as well. Let's take a look at the geographic breakdown. When it comes to dollars, you can see in blue that Cincinnati startups pulled in the most with $301 million for the first half, followed by Cleveland in the Northeast region in brown with 27%, followed by Columbus and Central Ohio at 25%. When we look at deal counts, we see a similar trend. Cleveland had the most deals at 53, Cincinnati at 37, Columbus at 36, Toledo with 10, and the other regions in single digits. So let's zoom out and see how venture capital has flowed into Ohio over the last several years. Over the last 8 years, venture capital has been flowing into Ohio, following a trend that's very similar to the national averages. We had a peak in 21 and 22. Everybody took a haircut in 2023. Now we're starting to tick back up. So this trend is relatively consistent with the nationwide trends that we're seeing. Now let's take a look at some specific deals for this year, starting with the largest ones. So far this year, the largest deal was $115 million, raised by 80 Acres Farms. This round was later stage development capital from really deep-pocketed investors like Barclays, General Atlantic, Siemens, and other deep-pocketed investors. I'll tell you more about this company when we get to the All-Star section. But let's take a look at this year's $10 million club. In life sciences, we had 8 deals over $10 million this year, with the largest being Syndome Pharma in Cincinnati, followed by Family with 25 million, Identify Sensors with 20 million, and several other great deals. It's really great to see these companies that are successfully raising large amounts of capital and building their companies here in Ohio, because the more we tell people about these deals, the more likely we are to get more of them. In technology, software, data, and AI category, we're tracking 6 deals over 10 million so far this year. Asset Watch raised another 75 million. I believe Will Zell might be here somewhere, but he was one of our all-stars for 2024. And so I just want to congratulate Will and the entire team at Asset Watch for continuing their march forward in success. Matic Insurance raised 30 million, and there are great stories behind each one of these companies, and I wish I had the time to go through all of them, but as I mentioned, I'll be able to get these slides to you at the end. In other categories, we had one big deal in auto so far this year. Endera Motors, they run EV fleets, and they raised a big round this year, and 3 others in professional services over 10 million as well. I'm going to show you all 38 of those seed deals that I mentioned in just a minute, but first I want to announce the first wave of nominees for the Ohio Venture Pipeline All-Star Awards for 2025. All-Star nominees are selected primarily based on the quality of their investor syndicate. Primarily what we're looking for is a nice blend of both local and coastal investors, because we want to show people that this is what it's going to take for you to take it all of the way to the finish line. You want to get a blend of both. So the first nominee for the All-Star class of 2025 is 80 Acres Farms. As I mentioned before, they raised the largest round at 115 so far this year, primarily from large out-of-state investors. And this money is on top of 255 million that they already raised before. So this is an ag tech company that is scaling very rapidly. The company operates indoor vertical farms using 100% renewable electricity and 95% less water per pound of produce, and it's pesticide-free. You may have purchased some of their products some of their salad products and kits in grocery stores here. The company is headquartered in Hamilton, Ohio, near Cincinnati, and it's a great one to take a look at. The next all-star is Sonic Fire Tech, and I have to say I'm fascinated by this one because they're using space technology to put out fires. I don't know if the CEO, Jeff Bruder, is in the room. Is he here? I know he was going to try to make it, but anyway, what's really cool is I encourage you to go take a look at their website, because they literally use acoustic sound technology to put out fires without water and without chemicals. But what's particularly interesting about this deal, beyond the technology, is the fact that they raised money from Khosla Ventures. If you don't know, Khosla Ventures is one of the largest VC funds in Silicon Valley. They manage over 16 billion of assets under management. They were early investors in iconic venture successes like DoorDash, Instacart, Stripe, Opendoor, and others. The co-founder, Jeff Bruder, has done great work at the NASA Glenn Research Center here in Cleveland, and you can learn more about his story on Jeffrey Stern's Lay of the Land podcast, and I believe it's episode 203. The next all-star is Narratize, and CEO and co-founder Katie Trouth-Taylor. I know she's a speaker here today. I don't know if she's in the room or not, but many of you know Katie, and her journey has been really inspiring to watch. I'm really excited to have the opportunity to honor Katie and her success in raising this round from a great group of investors, led by North Coast Ventures, Todd Fetterman, a good friend of mine, as well Engage Software, Comcast NBC Universal, the Ohio Angel Collective. I know a lot of the guys are here, Mike Supek and PK, good to see you guys. And I just want to, How Women Invest is in the deal, and Centrifuge Capital as well. Narratize is an intelligence platform for product innovation, and they have an impressive customer list, including Comcast, Boeing, Delta, Colgate, and others. So I want to congratulate Katie and her team, and we're cheering you on for continued success. Next, we have Gracie, which is a company expanding access to healthcare, education, and childcare. They raised a $3.5 million Series A round, led by a $1 billion fund in Austin, Texas, called Sante Ventures. Jumpstart Ventures, North Coast Ventures, and OVO were all investors in prior rounds, and the founder and CEO, Stephen McHale, is a board member of Actual, which is another rapid growth company in Ohio that's raised $40 million. So congratulations to Stephen and the team. Next up is CoolLogix, founded by Dr. Kimberly Langdon. They raised a $3 million seed round in April from Dream Ventures in Las Vegas, Bold Ventures in Buffalo, Illinois Ventures, and the Ohio State Early Investor Network. Developed by Dr. Langdon, Coologix provides a patented, fast, and effective treatment for infections. Next, we have Abri, which raised $3.4 million venture round led by PeakSpan with Jumpstart Ventures, Jibes Ohio Growth Capital, and Golden Angels investors participating. Matic Insurance raised a $30 million late-stage round from Vistara Growth, a $600 million venture fund in Canada. Next, we have a semiconductor company, Niobium. They raised a $12.85 million round in March from Alumni Ventures and Silicon Catalyst Ventures. HDS raised a $15 million round led by MK Capital, which is a group of folks in Southern California that I actually know pretty well, along with local investors Tamarind Hill, Jobs Ohio Growth, and Rev1 Ventures. Family's a part of John Health, and they were able to close a $25 million round from Darwin Ventures, another California fund that has over $700 million of assets under management. And Endera Motors, an EV fleet company, they raised $36 million from Magnetar, Pritchard Auto Stores, and several other deep-pocketed investors. And last but not least, Trailhead Biosystems raised a $20 million round in late-stage funding from Mac Capital, and this is a New York-based hedge fund. And there's a theme running through all of these that I think you can probably pick out pretty quickly, is that they have a lot of the money is coming from out-of-state investors. So as an entrepreneur, I encourage you to cast your net more widely than just looking for money in Ohio. So please join me in congratulating this year's class of Ohio Venture Pipeline All-Stars. The other group of deals that I want to share with you are the seed deals. And the reason that these seed deals matter is because just like the seedlings shown in this picture, each of these companies needs nurturing, care, and support. We know statistically that not all of them are going to be successful in graduating to Series A funding. This chart from Crunchbase shows at the top, in 2018, you see the dark blue, more than half of the seed deals received follow-on funding from that vintage. If you jump down to 2021, it flips. More in light blue did not receive follow-on funding, and that trend is continuing on down. So it's getting harder and harder to raise that next round of funding after seed. As I mentioned before, in the first 6 months of this year, we identified 38 seed financings that were successfully completed. I'm clicking, and it's not clicking. Can you help me advance the slide, please? I'm not seeing, the screen is frozen here. All right, so here's all the 38 seed deals. So you can see in Cincinnati, we had the most number of seed deals. In Columbus, we had the second most, and in Cleveland and Northeast Ohio. And as I mentioned, we're going to be able to send these slides out to you. And if I can get the notes on this screen down here, again, David, that would be really helpful. The other factors, so with these seed companies, they all need our support. And the most important thing you can do is to help them with introductions. The call to action is that they all need customers. They need introductions to customers, investors, team members, as well as strategic partners. And if they've raised money, they're looking to recruit team members as well. So introductions are one of the most important and helpful things that you can do. Ohio also has a great ecosystem, and the Ohio Third Frontier, as well as the ESP programs, have done a phenomenal job in creating a wonderful foundation to create a foundation for all of our venture-backed startups. In fact, we have great investors. The Ohio Fund, most of you know, they closed a $238 million fund, and they've already deployed over $130 million of that capital over the first 19 years. I'm still not seeing the notes down here on this one. If you haven't already checked it out, they have a great video on their website that has a 1-hour discussion with all of the founders. Thank you very much. And I'd like to congratulate Mark Kwame, Ray Leach, Jill Meyer, Mike Venerable, and Jeffrey Stern. Now, $238 million sounds like a lot of money, but they're just getting started. They have plans to build the Ohio Fund to a size that matches Ohio's GDP, which is currently over $800 billion. And if you want to learn more about it, I encourage you to go to their website and check out the video. We also have rising stars in the angel groups in Ohio. Queen City Angels in Cincinnati and North Coast Ventures right here in Cleveland made the top 20 list of the Angel Capital Association's 2025 Angel Funders Report. So congratulations to them and all the entrepreneurs that they are funding across the region. This report from the Angel Capital Association also had another really interesting insight. They found that angel groups are not just investing in their own backyard. In fact, in many regions, they're investing as much as 40% of their capital outside of their home region. And I love this quote, "Capital will travel for compelling opportunities." So for the entrepreneurs in the room, I encourage you to cast your net wider geographically as you look to raise funding for your startups. And the other reason you need to be looking for capital outside of Ohio is this map from Carta. We already know that most of the venture money goes to California, but how are we doing as a state and a region? Carta reports that the Midwest in light green is only drawing 4% of nationwide venture capital, and I think we can do a whole lot better than 4%. But what I'm really concerned about, quite honestly, is this headline. According to Carta, Ohio actually lost market share of venture capital in 2024 relative to other states. Now, the first thing I'll say is that I didn't write this headline, so please don't shoot the messenger, right? According to Carta, we dropped from 1.3% of nationwide venture capital to 0.54%. I haven't validated their calculations, and our numbers show slightly differently, but a similar trend. And the important point here is that we need to drive this trend line back up. So the natural question is, how do we grow our slice of the pie for venture capital? Obviously, we need more funding at all stages of development, and today's an excellent way to make those connections. We also need more human capital, operators that know how to put that money to work and build something worth 10 times what the investors put in. And I believe we need an all-of-the-above approach to recruiting more entrepreneurs to come back to this region as well as regionally, and to continue to lift up and support entrepreneurs like Katie Trouth-Taylor. Now, I've said it before, and I'll say it again, that I believe that we have the ingredients here in Ohio to significantly increase the amount of venture funding we have. Because when we look at the other key pillars of a thriving ecosystem, we already have all of the technical and scientific capital at all of these research universities and research institutions. We also have a collaborative and engaged community, which today is evidence of exactly that. And the path forward is pretty simple. It takes a village to raise a crop of startups. And everybody in this room has a role to play, whether you're an entrepreneur, an investor, an advisor, or a mentor. We need you to continue to lean into this community. We need you to continue to suit up and show up for events like this one and others. So let's grow Ohio's share of the most powerful driver of high-paying jobs and win together. So in closing, I want to encourage you to think bigger so that we can grow bigger. We're at the beginning of the largest tech disruption that the world has ever seen. And I believe that we're capable of doing a lot more venture deals than we currently do. And I have to say, Ohio's startup ecosystem today looks a lot like San Diego did when I arrived there in the early 90s. We have great stories to tell. We just need to tell them to the right people in the right place at the right time. We'll be hosting the Ohio Venture Pipeline at the iconic Ohio State House in the spring to honor these and the other OVP All-Stars who are making it happen. And I'd like to invite everyone to join us. If you'd like to receive an invitation to our State House event, please email me at jd@ohioventurepipeline.com, and we'll be sure you get an invitation to our event for the spring at the State House. And if you email me there, I will also send you all of the slides from today's.